Hi, everyone, and welcome to Lake Resources webinar. This is Jack Bourdais from RB Milestone Group. Lake Resources is publicly listed on the Australian Stock Exchange under symbol LKE. Joining us today is Lake Resources Managing Director Steve Promnitz, who will be providing an in-depth overview of the company, its future milestones, and some insight into the lithium industry. Please note, today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of control of the company. Lastly, RB Milestone is not a registered investment advisor or broker-dealer. It is now my pleasure to introduce you to Lake Resources Managing Director, Steve Promnitz. Steve?
Very good afternoon to those of our listeners in North America and Canada and the US. Very good evening to those in Europe and the UK. And a very good morning to those in Australia. It has ended up being a little early for those investors in Hong Kong and China, and we may do that at a later time. This presentation I'm going to run through was announced on the ASX a few days ago, late last week, and it essentially tries to summarize where Lake Resources is at the moment and where we're going to be going over the next 12 months, and aimed at providing a full update to potential new investors, given that a lot of our key information was released in November, December last year, when the markets were somewhat quiet. So without further ado, I'm going to go through each of these slides fairly quickly. Many of them are fairly self-evident, so that we can get to a Q&A platform at the end. Lake Resources is focused on lithium in South America, predominantly in Argentina. And there are 5 key things about it which are summarized in that first slide. The lithium that the 4 projects that Lake Resources have are very well located, both with size and their location alongside major producers. At Kachi, we defined a very large resource late last year with the opportunity for new technology. But I would just point out that as Jack mentioned at the start, there is a disclaimer here that you can read at your leisure on slide 2. I will be making forward-looking statements, and there is cautionary statements that some of these things may not come in the timeline that the company had anticipated. On slide 3 are the investment highlights, and essentially this slide and the adjoining map summarize exactly what Lake Resources is focused on. We have one of the largest lease holdings of lithium available on either the ASX or the TSX, with more than 200,000 hectares owned on a 100% basis. This provides both scale and optionality. Within that large lease holding, we have 3 lithium brine projects and 1 hard rock spodumene project. Of the flagship projects, Kachi is our lead project because we've advanced it to the largest extent at the moment. We identified a very large resource which was announced under the JORC guidelines in late November, and it is now one of the top 10 global lithium projects, and that was defined within 12 months of drilling from a project that had never been drilled before. It's 100% owned by Lake Resources and its subsidiaries, and essentially we have an entire lake bound up by mining leases, nearly 70,000 hectares. It's a relatively large basin. Of the salt lake that is visible, it's about 20 by 15 kilometers, and we have defined brines to at least 400 meters in drilling and at least 800 meters in geophysics. Within that, we've defined an initial resource, what we call a maiden resource, of 4.4 million tons of lithium carbonate equivalent. And the subset of that is in the indicated category, 1 million tons, and in the inferred category, 3.4 million tons. And that lies within an exploration target, which is also defined under the JORC guidelines, of 7 to 18 million tons of lithium carbonate equivalent. And it is our anticipation that with another year or year and a half of drilling, we could easily double that resource and move it well towards the exploration target number. We are currently initiating a pre-feasibility study, a PFS, and that is looking at both conventional extraction as well as a new technology for direct extraction. The direct extraction method promises to market into production at least 1 year less because of the absence of the need for evaporation ponds, and also to provide potentially lowest quartile cash costs based on the phase 1 engineering study that we have completed at the moment. Those lowest quartile operating costs are down around US $2,600 a ton, lithium carbonate equivalent, plus or minus 30% at this stage. With Kachi, our intention then is to expand the resource, move it through a pre-feasibility study, and our intention is to get a pilot plant on site to demonstrate how this can be in production relatively quickly. Separately, at Olaroz and Cauchari, these are well-known projects where we adjoin Orocobre to the east of their production at Olaroz and Ganfeng Lithium Americas to the west at Cauchari. We are currently drilling at Cauchari. It has taken longer than expected, but we're well underway. And our aim is to find extensions of world-class lithium brine resources, both at Cauchari and Olaroz, as we have already identified these extensions in geophysics. The beauty of both Olaroz and Cauchari is not only are they in development or in production, but the brines are well known. When you're drilling a lithium brine, essentially the chemistry and the fluids are going to be relatively similar, regardless of where you drill them. It's more around flow rates. And our drilling at the moment is underway to target deeper targets. These leases are all pegged more than 2.5 years ago and are 100% lake resources. We have a third hard rock project in pegmatites, which cover nearly 80,000 hectares. This is an area that's had past production on a small scale of lithium in spodumene, and our intention is to find new modern targets of a scale similar to Western Australia, and that work is ongoing, but still in an early stage where we're trying to identify targets. And here we have a blend of both mining leases and exploration targets. Despite the market having been somewhat soft, we continue to see major transactions in the lithium brine space in Argentina. Next to us at Cauchari was a major acquisition during calendar year 2018, where Ganfeng acquired a third of the Cauchari project for US $237 million, including some assistance to Lithium Americas. And that's 8 times Lake's market value. And at Kachi, to the north of Kachi, the northern part of the Galaxy Sal de Vida resource was recently sold for US $280 million to POSCO. And all of these put a fundamental valuation underneath the company. Recently, we saw the announcement of a takeover of LSC Lithium. They were the other large leaseholder in Argentina. And so it would seem that fairly soon Lake are going to be the sole large leaseholder of lithium in Argentina with projects that have not been dealt yet. We have had numerous conversations with potential downstream partners, and we anticipate those things to expand during this calendar year. So on a comparative basis, we're significantly undervalued versus peers. We've had recent research on Lake Resources. All of this came out in November, which has between a 30 and a 73-cent price target. So there's significant upside, and the transactions that have occurred continue to support these valuations. So essentially, slide 3 summarizes who the company is. On slide 4, we have a map essentially showing where those locations are. To the south here, we have the Kachi project in Catamarca province. This is about 80 to 100 kilometers south of FMC Livent's production. They've been producing for now more than 20 years in Argentina. And Galaxy was more than part of their assets to POSCO. And then the north, we have Olaroz and Cauchari, and then on the border with Chile, another project called Paso. Olaroz and Cauchari, as mentioned, are located right next to Lithium Americas Ganfeng and also Orocobre. And that map you see there is the lithium triangle, and 50% of the world's lithium is produced from here, generally at the lowest costs. So who's behind the company? There's myself as Managing Director. I have worked in predominantly South America and Southeast Asia, either as a geologist in exploration, project development, operations, or in management, and also in finance in both stockbroking and in debt advisory. I first came to Argentina in early 1993 and spent 6 years working in Peru, Chile, Argentina, and Brazil at that stage. That was a good time because I had the opportunity to assist in drafting new mining legislation together with the company I was with at the time called CRA, which became acquired by Rio Tinto, and I spent a number of years with those companies and then later Western Mining. More recently, I've looked at precious metal projects as well as lithium. In the past, also looked at a potash project and got that to project development stage in Argentina. And the advantage is that a potash uses an evaporation process not dissimilar to lithium. Stu Crow, our chairman, has had more than 25 years in the stockbroking industry in the UK as well as in Australia, and has recently been on a numerous number of public companies associated with the new energy space, battery technologies, renewables. Nick Lindsay, our non-executive director, is what we would call our technical director. More than 25 years of experience in Chile, Argentina, and Peru. His doctorate is in materials processing, so he's an excellent guide to look very carefully at the processes and the steps that are necessary to get projects into production. And on the ground, we have a blend of youthful exuberism and some grey heads, ensuring that these projects move ahead. Most of the participants, either geologists or hydrogeologists, have worked on other major projects in the lithium brine space and have existing long-term relationships. Moving now to slide 6. From a market perspective, this slide provides the deep comparisons between LKE as Lake Resources versus our peers. In blue on the left are the neighbors, Lake Resources, Olaroz, and Cauchari, with their ticker codes. Orocobre, of course, are in production, so they have a larger market cap. LAC, as I mentioned, are now subject to a takeover. Advantage Lithium and Millennial are alongside us. And then just in the broader space, there's also other players in the industry, such as Galaxy, NLC, and AGY. And on the left-hand side, you can see the price targets between 36 to 73 cents a share. And then the orange graph tries to make a comparison of the size of the brine resource versus our peers, and you can see a significant disconnect between the size of the resource and our market cap versus our peers. And we suspect that this is primarily due to the timing of our release of a resource coming out in late November, when the market was perhaps looking the other way. Just briefly, I want to discuss here on slide 7 the market at the moment. This is all based on third-party research. A lot of our information comes from Benchmark Mineral Intelligence. They run sessions all around the world each year, what they call their Global World Tour. And this is based on information from September and December. The key metrics I want to point out is that despite the market having been somewhat soft during calendar year 2018 in the battery mineral space, the increase in the lithium-ion battery capacity continues to go up substantially, from 3 megafactories in 2015 to 68 either in construction, producing or planned at the end of 2018, 3 to 68 from around 150 to 1,450 gigawatt hours, and this will continue to expand. So if we just look at that capacity, that would require an 8 times increase in lithium supply in the next 9 years. Now, of course, forecasts are difficult, but even some of the more bearish forecasts show at least a 5 times increase. And we all know how hard it is just to double production. So this really augurs very well for future lithium producers. Basically, we're looking to need more than 1 million tons of lithium carbonate production on an annual basis in the next 9 years, from 27 to 150,000 tons. So now we're going to go through each of the projects, starting with slide 8, starting with our Kachi project. Large scale, low impurities, and a major resource. Sorry, just on slide 8, for those of you that are unfamiliar with what brine lakes look like in the high Andes, either in Chile or Argentina, this image here of Kachi, this could be any of them. They're all fairly high altitude, hyper-arid. That's why they're salt lakes. And you see down the bottom left-hand corner, that lumpy material is the salt, extremely coarse due to the high evaporation rates. So slide 8, in yellow is the outcropping salt lake, and we have defined a resource there, or what we call the salar. And in red is the boundary of the exploration target under the JORC code of 8 to 17 million tons lithium carbonate equivalent. And in blue is an approximation of the initial resource of 4.4 million tons of lithium carbonate equivalent. Just want to re-emphasize that this project was previously untested. We've now got 15 drill holes at various depths between 100 to 400 meters. It's a large salt lake with a significant resource. Good chemistry, low impurities. The grade here is a little lower than some other projects at around 300 milligrams per liter, but still stands up well on a global basis. A low lithium magnesium ratio, which is important. And the brines start from surface to 400 meters where we're drilled to, and in geophysics, it looks like it goes to at least 800 meters. When you're looking at a lithium brine project, it's important to have the right chemistry. It's important to have a reasonable grade. And it's also important to have good permeabilities with high flow rates, so you can actually suck the brine out of the basin. The advantage that Lake Resources has here with the Kachi project is that this basin is full of sands and it has quite high permeabilities. We're expecting those permeabilities to go up as we have more samples to demonstrate that. On slide 10, we look at a broader view. Here in blue is the periphery of the actual drainage of around 6,800 square kilometers. And all of those fluids drain into that central salt lake at Kachi. And in orange are our leases of nearly 70,000 hectares owned 100%. So the brines that were defined to date in the exploration target, that would be a brine volume equivalent to 25 times Sydney Harbour. And it just goes to show that these are substantially large resources with potential to be producing for many decades. And that is really what attracts interest primarily out of Asia from downstream battery players, because they want to have that consistent long-term production from a consistent and single resource. On slide 11, the geophysics have identified on the right-hand side what the makeup of the basin is, that it's down to at least 800 meters, but you can see from the little red lines here that we've only drilled this to 400 meters to date. And there's a comparison of where Kachi sits, or it sits here at the moment, but with a bullet moving to 8 to 17 million tons, which will put us amongst one of the top 3 or 4 in the globe, if in fact the drilling then shows out how this project will develop. So it's the key takeaway here is it's substantial. On slide 12, we talk about a new direct extraction method. This is one of them we've looked at called LEILAC, and this uses a ion exchange technique where you pump the brine out. It goes through a column with beads or they're called a variety of things, but the beads essentially selectively extract the lithium from the brine, and in the process make it even cleaner, and then the excess volume of liquid of brine then gets pumped back into the aquifer. So this has a benefit from an environmental perspective. It means you don't have a large footprint of evaporation ponds. And it also has very high recoveries. Recoveries from traditional evaporation are around 40 to 50%, and that's the same in Argentina and Chile. Whereas with this direct extraction methodology, you can achieve recoveries of 85 to 90%. The effect of this is that it doubles the recoverable grade. And so a 300 milligram per liter resource would be similar to a 600 milligram per liter resource because you're doubling the recoveries. And so essentially our recoverable grade stands well alongside of other major targets. LEILAC has completed a phase 1 engineering study, and that has shown lowest quartile operating costs of around US $600 per ton lithium carbonate equivalent. And if you look here on the right-hand side, this is a graph that's put together by Global Lithium and in the Neo Lithium presentation, and you can see that those numbers would put us right down the bottom end of the current cash cost curve. It's our view, unfortunately, that the resource we mentioned a couple of slides ago and this information about development options, which came out in late November, early December, just came out at a time which was poor for the market, and so didn't receive a lot of attention. This is a summary of the actual mineral resource, which just defines the numbers under the JORC code as released. On slide 14, now we're moving north to Jujuy province. We're going to be looking at the Cauchari and then the Olaroz project. At Cauchari, in the background, is Lithium Americas Ganfeng. This is well known to our North American colleagues. This is a world-class resource, more than 11 million tons of lithium carbonate equivalent. And this covers most of this salt lake here. Then there's a thin corridor with the Orocobre and Advantage Lithium, and then there's a tenement 11 kilometers long owned by Lake Resources. And here's a photo of a lake drilling underway in December. In yellow is Lake Resources leases, which almost adjoin the green area of Lithium Americas Ganfeng and a narrow corridor owned by Orocobre and Advantage Lithium. So combined, there's nearly 15 million tons of resource, and our intention is to find a resource within our yellow areas. It's a likely extension of these resources as defined by the geophysics that we've done to date, and as mentioned, we're drilling at the moment. Unfortunately, that drilling has been somewhat slow. We have encountered brines, but under very high water pressures, and we have a third hole underway at the moment at around 150 meters. We did try to drill these initial holes quite quickly so that we could come out with results. That didn't prove successful. So we've actually retooled a different drill rig, a rotary rig, so that we can move slowly and get to the target horizon to demonstrate that we've got the same brines here within our leases as in the adjoining leases. This is relating to an exploration model we came up with 2.5, 3 years ago, where we specifically chose to target the peripheries of these basins. We knew that lithium brines would be present in the aquifers. If you look here in this image, we knew that they were present. What we wanted to do was find where we could get high flow rates. And our thesis was that we should be able to drill those on the boundaries of these basins and find material just as good as what's in the middle, but perhaps at higher flow rates, and make that then cheaper to develop. That was a model not well known at the time, and so these leases were available to be pegged. In the same way, when we look at Olaroz, the Orocobre production plant is here in the background to the left. There in that white, you can see the salt lake. And then here behind this dotted line is tenements 30 kilometers long, which are owned 100% by Lake Resources. The permitting on this has taken time. Since we initially applied for these leases, it's been more than 2.5 years, nearly 3 years. But we're now at a stage where we have approvals to drill at Cauchari, and once we finish the drilling at Cauchari, then we'll initiate the drilling at Olaroz. Here in yellow are the leases by Lake Resources. As I mentioned, they cover a strip 30 kilometers long. It's unfortunate. It's taken us a while to get to this stage. But the good thing was these areas were essentially forgotten about, we suspect, because our neighbours had a different geological model at the time. And it's been pleasing that drilling has occurred along our lease boundary at Cauchari, and the same will probably occur here at Olaroz as we extend the known world-class resources into our leases. As a change, we also have a hard rock pegmatite target in Argentina, and it covers a very large area in an area that has had past production at a small scale. In this image, you can see outcropping pegmatites here. All of these ridge lines are outcropping pegmatites, and it's a very large area, more than 80,000 hectares. The leases then cover a strip nearly 150 kilometers long, but what we're looking for here is a new exploration model. That's what I want to emphasize. We know that there has been past production here, but it's been relatively small for the glass and ceramics industry, and also for lubricants. This was 10 to 40 years ago that production was occurring. Drill results here have shown the right grades, but we're looking for a large-scale deposit. We've done field-based XRF, we've done structural targeting, and we've been defining new drill locations we're trying to identify in the field to then get this underway. It's still early stages, but we signed an option agreement on this in the year 2016. We confirmed that and executed that agreement during 2018, so we own these leases on a 100% basis. So a quick recap on slide 20. A path to increasing the value in LKE and achieving some of the targets that our analysts believe we should be able to achieve. First of all, with the resource at Cachi. It's a top 10 resource. It's one of the last 100% owned brine projects available in Chile or Argentina. There's a potential there to at least double the resource based on our current resource and the exploration target. We're looking at direct extraction to lower operating costs into the bottom of the lowest quartile, and also to bring that forward into production. And the analysts report an in-ground value here well north of US $200 million based on other transactions that have occurred. At Cauchari and at Olaroz, we'll be drilling. We're drilling at the moment in Cauchari and expect some results as soon as we can get that. And then once we've completed drilling in Cauchari, we'll then move on to Olaroz to extend the resource. At Cachi, we'll initiate our PFS. And with the PFS in our hand and development options, we believe that will then be able to crystallize some potential strategic partners. The discussions we've had with strategic partners is, as mentioned, with companies that either make lithium batteries or make the cathodes, for them to invest at a project level and advance this project. The advantage is that with Cachi, there are producing projects that have grades similar to Cachi. They're in China. There's also projects that are being developed in the USA. But the advantage of the new technology we're looking at through our PFS is that this could actually change the look of this project in Argentina and bring it forward from a time perspective into production sooner, and also lower its production costs. The benefit is that conventional extraction are still relatively low cost. So if we look at that path to uplift from a timeline perspective, if we look at the past 3 years, we pegged our leases before there was a real boom in lithium, as soon as the government had changed in Argentina. That was then put into Lake Resources. Last calendar year, 2018, we defined Kachi as a large discovery. We signed an access agreement to Olaroz and Cauchari, which confirmed our ownership. We consolidated leases at Kachi, and we also signed the option over our pegmatites. And then in November, we defined a large resource at Kachi within a large exploration target. We came out with our engineering that showed a direct extraction at very low costs, and we initiated the drilling at Cauchari. As we look into this calendar year, we're aiming to complete our drilling at Cauchari, initiate drilling at Olaroz, and we believe those two things will be of a great attention to the market. And then at Kachi, as we move through our PFS, to demonstrate that both direct extraction, together with a pilot plant and evaporation ponds, that this project can be developed in a conventional method, or we can use technology to accelerate its production and lower its potential operating costs further. The benefit of Olaroz and Cauchari is because there are identified resources next to us. We already know within a range the grades that are going to be expected and the type of chemistry. It means that we should be able to move those projects forward quite quickly, and to then have a feasibility study underway at Kachi, a pre-feasibility study and a resource at Olaroz and Cauchari, expand Kachi further, have some initial results out of our pegmatites, and probably investment deals underway on at least the Kachi project. At a corporate level, 360 million shares on issue in North America, but in Australia on the ASX, that's a fairly moderate number of shares on issue and not too many options. We did sign a note, a convertible note, which can start to convert from June 2019. We signed that in December, so that's the 9.9 million options, which we aim to issue once the 9.9 million notes and 5 million options we plan to issue after our next shareholder meeting. But we do have a fairly moderate market cap of around 25 million Australian. We have a cash in the bank, but just like all companies, all small cap companies need more, and we had it planned to raise more from the note in December, and we're actually having discussions at the moment with a couple of key possibilities about issuing further notes. We have a fairly tight share register, mainly with high net worth investors in Australia, but we've been welcoming investors in Europe, in the UK, in North America, and in Hong Kong and China in the last year and more recently. Significantly undervalued versus our peers, with a lot of upside and very limited downside. And we believe that this year, 2019, is really going to be a major breakthrough year for the company on at least the Kachi project and probably on the Olaroz and Cauchari project. In summary, on slide 23, this is another view of Olaroz, where we'll be drilling soon. Our roads across the area. These are actually sand dunes you can see in the foreground that we are drilling through into the brines, which you can see are exposed at surface in the distance, but actually extend underneath these sand dunes to the edge of the basin, which is sort of behind us in this view. On the slide, there's my email address, the website of the company, where you'll be able to listen to this later on. Phone numbers as well for the team at 6 Degrees. And on our recent release, you saw the information to contact IB Milestone in North America. And so I thank you for your attention. Lake Resources It's one of the last remaining companies that owns projects on a 100% basis at a major scale in the right locations. We continue to see transactions around us, and it's only a matter of time before that will drive a significant increase in the value of Lake Resources. Significantly undervalued versus our peers. We suspect that's more of a timing issue. And I'm going to now hand it over to questions, and I welcome the questions that have already been posted, which we'll go through, and any others that you may have. Thank you for your attention. While we've been presenting, there have been a number of questions which have been directly lodged on the webinar platform, and I will start with those in the order that they have been requested. There was a key question around, in inverted commas, the lack of interest in LKE, and it's confusing to the person who's posted this question, given the volume of positive news flow. I would have to say that at a board level at Lake Resources, this has also been somewhat confusing, in that we released a major resource in November, an engineering study with some of the lowest quartile cash costs, and also initiated Caucharí drilling. I suspect that this is mainly due to a timing issue. It didn't really matter if you were in financials, industrials, large cap or small cap. In October, November, December, there was a certain amount of capitulation in the market. And so when you're pitching good news into a story that perhaps people are less interested, it then becomes more of a selling event rather than an opportunity to acquire. We have strategically made the decision to focus more on the North American and European, UK markets this year, so that we can get a wider breadth of potential shareholder interest. And also, particularly in North America, there's an opportunity to do more of a compare and contrast. Now that we have a resource, we can compare with other participants in the sector rather than the sea of limb explorers on the ASX and the TSX. The next question was around a trialing of both evaporation ponds and direct extraction methods using the LILAC method. Our plan at the moment, and I would reiterate that this plan will be redefined under the pre-feasibility study, but our plan at the moment is to produce a concentrate on site using both evaporation ponds and the direct LILAC extraction process, and then that concentrate be processed at a location where there's easy access to infrastructure and personnel to then produce a lithium carbonate. We may have a smaller plant which has a complete process on site, but the intention was to be able to produce a lithium concentrate which could be exported, a lithium concentrate that could be then made into lithium carbonate and also into lithium hydroxide. And the intention of the PFS is to work out whether all of those are viable options or whether we should be just producing one or two of them. I just would reiterate that the conventional methods appear to work, but the direct extraction method offers the opportunity to produce a very pure product in a shorter timeline at low costs. The next question comes from looking at the lease holdings at Kachi. And asks why the lease holdings at Kachi extend beyond the boundaries of the brine basin. The reason for this is at the time these were applied for, it was difficult to know exactly where the extent of the brine basins were. What we have found in Argentina and in Chile is that although the salt lake, for example, on the last slide 23, although the salt lake can be seen, the edge of the basin can be some distance under thin alluvial cover. And so that's why we have a very large holding there. There was a question around whether they were producing projects similar to Kachi in the globe. There are a couple in China at the moment which have a grade substantially less than this, but also of significant size in China. And this production actually came on last calendar year in 2018 at Qinghai. And there's also production from similar and lower grades in the western US, and projects that are looked at being developed at the moment with a grade lower than at Kachi. The grade is very similar to the project immediately adjacent to Kachi called Antofalla. This is now owned by Albemarle, the #1 lithium producer in the world. They have currently got that project on ice, and it'll be interesting to see where that project develops in the future. Really, the kicker here is that by demonstrating the benefits of the new direct extraction process, this can become a real game changer in low costs and a shorter time to production. Our next question is around the pegmatite project. And the comment has been that it seems to be getting less attention than the brine projects. Our pegmatite projects are at an exploration stage. There are areas with outcropping spodumene, both in our leases and in adjoining leases. But what our intention is to find a large project, because there are, unlike brines, there are pegmatite projects in many locations around the globe. What we would like to do is define a target which has a scale of something like in Western Australia, and that's going to take some time for us to define. Secondly, in our pegmatite projects, we have both mining leases as well as CATAOs, exploration licenses. We only signed and completed the conversion of our option over that relatively recently, a few months ago, in the year 2018, but you'll see more news from that. We just felt that we're going to get the best bang for our buck in defining a resource significant at Kachi, and also then drilling at Olaroz and Cauchari. And when we have time and money, we'll continue then with our other projects. If we go back 3 years ago, lithium was really just another low-value industrial mineral. I have had the opportunity to work in fertilizers and industrial minerals in the past, and really the game is to know more the market rather than the resource. You have to have low-cost operating costs, but you've got to be well engaged with the downstream end. The difference happened with lithium is that it moved out of an industrial mineral for lubricants and for ceramics, and became quite important in battery minerals. The value of lithium increased 5 to 6 times, and so immediately a company started looking at how they could use new direct extraction methods to lower the operating costs and bring these to market sooner. It wasn't that people hadn't looked at these methods before, it's just there really wasn't a value proposition. But if you can see significant margin, I mean, if we were producing it somewhere around $2,500 a ton, even if the lithium price came off more, you've still got a significant margin on your final sale price, which in recent times, depending on who you look at, is somewhere between $12,000 and $15,000 a ton lithium carbonate equivalent. So that's why there's been a focus on direct extraction. Of course, if you're currently producing or you're currently developing a project of lithium brines, you're not that keen necessarily to look at new direct extraction methods. So it behoves some of the newer players like ourselves to show how these can be quite effective from a both capital and operating cost perspective. So thank you for your posted questions. I'm going to hand back now to Jack.
Thanks, Steve. We're going to conclude the question portion of the webinar right there. And thank you, everyone, for joining today's webinar. If you have any questions that have not been addressed on this webinar, please feel free to email the company directly at steve@lakeresources.com.au.